What up, crew? In the last live stream, we spoke about CME Gaps. This knowledge is absolutely fundamental to crypto trading. So here's a step-by-step tutorial. Stay tuned until the end. The first thing to understand, obviously, when you talk about CME Gaps is the definition of the word CME. This is the Chicago Mercantile Exchange. This is a global futures and options exchange. It is one of the largest exchanges that offer trading on high-risk assets such as cryptocurrencies, derivatives, and options. For those of you who don't know what futures and derivatives are, you're able to add leverage, which is a contract which actually allows you to increase your risk and potential reward. This can create a huge amount of volume and volatility in the markets. This is why it's very important that we follow this CME chart. Very important to understand the reason for our CME gaps is that the Chicago Mercantile Exchange only trades during weekly trading hours in the US. So at night, it creates small gaps every day, and also during the weekend, it creates larger gaps. If there is a big price movement over the weekend, it creates a nice big gap, and this creates an imbalance in our charts. And we're going to talk about the CME gap filling theory, which most traders use to trade this chart. These gaps, which are left as imbalances, act as magnets, which pull our price back to those levels. Right, in crypto trading, we use the gap fill theory, which says that the gaps caused on the CME chart by the open and closes are actually magnets for price, as they are technically imbalances that need to be filled in order for the charts to continue working. Very important to find your CME chart, come to the chart which is titled BTC1 exclamation mark. All right, when I started trading, I was very confused and I couldn't find this chart. BTC1 exclamation mark. This will show you your CME chart. And let's just go back in time to have a look at just how beautifully these gaps are created and filled. You can see this is a chart that I have been using and trading for a very long time. This is OG info. Do not sleep on this info because it can actually give you profitable trades week in and week out. Let's start here with this beautiful CME gap that was created right here when Trump decided to really pump the markets by using crypto as his own push for his own gain. The best way, in my opinion, to actually follow these is to draw a rectangle from exactly where that chart closed on the daily time frame. Draw it from the wick and bring that rectangle up to where the chart then opened on the Monday morning. And here we can see it was a beautiful gap all the way from 76,000 all the way to 80,000. Then make sure that you pull this rectangle out. And what's so crazy when you look at the CME history is the absolute high statistical level that these gaps are filled. If you go back in time, you will see that 90 to 97%, depending on the exact chart you are using, 90 to 97% of these gaps are filled in time. And a lot of us who have been using this chart for a long time said, you know what? It is only a matter of time. And lo and behold, have a look that we have recently, of course, filled the bottom of that gap. Absolutely awesome. We can see the CME closed at 83,000. The CME then opened again at 79,000. It created this massive gap for us. And lo and behold, yesterday, absolutely beautifully, we can see, oh, today, boom, at exactly as the day started for me at 12 a.m., we can see to the dollar that CME gap was filled right to the top of the gap. Do you see how significant, how beautiful this is? This is not something that you can ignore. on the charts. One thing that I must just stress, and we'll look at it in depth in a little bit, is of course using confluence with other indications. One of them of course can be extreme support and resistance. We can see a beautiful level here of support and resistance with beautiful wicks, and of course trading is all about confluence. I cannot stress this enough. Never rely on one sole aspect on the charts or one sole indicator. You always want to have confluence. So let's actually talk about a strategy right now. Once again, the first thing you do to trade this is to take a rectangle and draw your rectangle from exactly where the CME gap started, from where the CME actually closed, all the way down to where the CME then opened again on the Monday, and you pull that rectangle out. Right, the next major thing that I would recommend for when you trade this is to identify a nice support level. You can use Fibonacci retracement for this. You can use your RSI. You can use technical price patterns such as double bottoms, etc. But here we can see even candle reading, a beautiful hammer can tell you to go long, a beautiful bullish engulfing. It's all about your own trading strategy, and it's all about confluence. But here we can see some beautiful confluence for entry at support, at candle reading, and I would always recommend to start taking gradual profits at the beginning of this gap. Most likely the entire gap will be filled. Then our major take profit is of course at the end of the gap, or basically where the chart closed on the CME. And we can see this one was beautiful. Look at literally the millions of traders who took their final take profit at that level after the double bottom on the 1 hour chart. One thing to be of course very aware of at all times is risk management when we are trading strategies. We can see that the candle reading and the support, of course also the daily RSI as well as the 4-hour RSI. If you need to learn RSI, watch my video on it. But we were getting a lot of confluence for an entry at this level. Make sure that you always use a good risk to reward ratio on your trades. So here you can see that if you are going for your ultimate price target at the top of the CME gap, you always want at least a 1 to 2 risk to reward ratio. So you could have technically brought your stop all the way down to there. I would have brought it somewhere to round about here, of course below the previous wick swing low, and we can see just how important that would have been if you wanted to get your final take profit. At this point you should only ever be risking 1% of your trading portfolio at every stop loss. Some of my personal tips: number 1, go for the bigger gaps, right? The bigger gaps will give you your bigger take profits, right? Remember, in crypto you always want to risk a little bit to earn a lot. You never want to risk a lot to earn a little. All right, another one of my personal tips on this is to have a look for the large moves that occur away from the gap first, because that will give you a better trade. And we can go back to these two beautiful examples to show that, first of all, here was your gap. But a nice reason to trade this CME gap is how far price pumped first away from the gap to actually confirm the beautiful resistance, because this gives you more space for profitability within your trade. Another beautiful example is of course this last trade that we just saw from the previous weekend, where we saw first of all a beautiful big gap, but then we also saw that price moved decently nice and far away from that gap first to give us our beautiful support wick and more space for profit. To summarize, of course, why these gaps happen is because the CME exchange does not trade on off hours over the weekend. A little bit of a summary on how to trade them, of course, is to wait for a move away from the gap, then find confluence of either support or resistance at a nice gap away from that CME gap, then use your risk management to enter a trade up to the final take profit at the closure of the full gap, and make sure you take gradual profits along the way. One more important thing is, of course, to have a rounded strategy. Do not use any one thing. As I have said, make sure you use confluence in your trading. Make sure that every time you open a trade, you can say, I have used a rounded strategy. I have checked the RSI, I have checked the Fibonacci levels, I have strong supports, I know how to read my candles. And if you need to know all of these things, please do watch my crypto trading tutorials playlist. I am also now starting a candle reading playlist, as well as a playlist on how to use exchanges, literally how to deposit, how to open trades, how to set your stop loss, etc.
Thanks for watching, crew. Show the love with a like and a share, and subscribe to the channel if you're new. Also, be sure to join my trading academy on Telegram, and of course, always play from a position of power and strength.